Stop scrolling. In the time it takes you to watch this video, Jeff Bezos will make more money than you'll earn in your entire lifetime. But here's the insane part. He'll pay less in taxes than you will. $0. While you're losing 30% of your paycheck, billionaires are legally paying nothing. How? 3 words. Buy, borrow, die. I'm about to expose the biggest financial scam in history, and it's completely legal. This is going to make you furious. What's up, everyone? And welcome to the most eye-opening video you'll watch this year. I'm about to pull back the curtain on a secret that the ultra-wealthy have protected for generations. We're talking about tax avoidance strategies so sophisticated, so perfectly legal, yet so morally questionable that once you understand them, you'll never look at wealth inequality the same way again. Before we dive deep, let me hit you with some shocking facts that'll set the stage for everything we're about to uncover. According to ProPublica's investigation of IRS data, between 2014 and 2018, the 25 richest Americans saw their wealth increase by $401 billion. Want to guess how much they paid in federal income taxes during that same period? $13.6 billion. That's a true tax rate of just 3.4%. Meanwhile, the median American household earning $70,000 per year pays 14% in federal taxes. Let that sink in. You're paying 4 times the tax rate of billionaires. Elon Musk, the world's richest person with over $200 billion in wealth, paid 0 federal income tax in 2018. Jeff Bezos, 0 in both 2007 and 2011. Michael Bloomberg, 0 in multiple years. Carl Icahn, 0. These aren't criminals. They're not breaking laws. They're exploiting a system that was designed, intentionally or not, to benefit the ultra-wealthy while the rest of us carry the burden. Now let's get into the meat of this. The crown jewel of billionaire tax avoidance. The strategy that makes all of this possible. 3 simple words that represent the most powerful wealth preservation technique ever devised. Buy, borrow, die. This isn't just a catchy phrase. It's a multi-generational wealth transfer mechanism that's perfectly legal and devastatingly effective. Step 1. Buy. Billionaires don't keep cash. Cash is for poor people. They invest everything into appreciating assets. Stocks, real estate, businesses, art, private companies. Let's use a real example. When Jeff Bezos founded Amazon, he owned a massive stake in the company. As Amazon grew from a small online bookstore to a $1 trillion empire, Bezos' shares skyrocketed in value. His net worth went from millions to tens of billions to over $100 billion. But here's the critical detail that changes everything. As long as he doesn't sell those shares, he owes absolutely 0 taxes on that increase. This is called unrealized capital gains, and it's the foundation of the entire system. In the United States and most countries around the world, you only pay taxes on investment gains when you sell. Your Amazon stock can go from $100 to $10 million, and the government can't touch it until you cash out. So what do billionaires do? They simply never sell. They hold their appreciating assets forever, watching their wealth compound tax-free year after year after year. Warren Buffett, one of the world's richest men, has openly acknowledged this. He's held Berkshire Hathaway stock for decades, accumulating over $100 billion in wealth. And he's paid shockingly little in income taxes relative to his net worth. Why? Because he doesn't sell. His wealth grows in the shadows, invisible to the IRS. But now you're probably thinking, okay, if they never sell, how do they actually live? How do they buy yachts, private jets, and $100 million mansions? They can't just use their stock certificates to buy a Ferrari, right? This is where the genius, or the evil depending on your perspective, really kicks in. That brings us to step 2. Borrow. Instead of selling their assets and paying capital gains tax, which in the US can be up to 23.8% for the wealthy, billionaires do something completely different. They borrow against their wealth. It works like this. Let's say Elon Musk wants $100 million to buy a new mansion or fund his lifestyle. Does he sell $100 million worth of Tesla stock and pay $24 million in taxes? Absolutely not. Instead, he walks into a bank, shows them his billions in Tesla stock, and says, I want a $100 million loan using my stock as collateral. The bank happily agrees because it's a zero-risk loan. If Elon defaults, they just take his stock. They'll often give him an interest rate of just 2 or 3%, sometimes even less, because he's such a safe bet. Now Elon has $100 million in cash to spend however he wants. And here's the brilliant part. Borrowed money is not taxable income. The IRS doesn't tax loans. So Elon gets his cash completely tax-free while his Tesla stock continues growing in value, untouched and untaxed. Let me break down the math so you can see how insane this is. If Elon sold 100 million in stock, he'd net about 76 million after taxes. But by borrowing, he gets the full 100 million, pays maybe 2 million per year in interest, and his stock keeps appreciating. If Tesla stock grows by 10% that year, his collateral just increased by $10 million, more than covering his interest payments. It's literally free money. He's living a billionaire lifestyle while paying almost nothing in taxes. And this isn't theoretical. This is exactly what they do. According to financial disclosures, Elon Musk has borrowed billions against his Tesla and SpaceX shares. Larry Ellison, founder of Oracle, has borrowed hundreds of millions against his stock holdings. Mark Zuckerberg has done the same with Facebook shares. They're all playing the same game, and it's completely legal. But wait, there's more. These loans have another hidden benefit. Remember, billionaires are paying maybe 2 to 3% interest on these loans. But if their assets are growing at 8 to 10% per year, which is the stock market average, they're actually making money by borrowing. It's arbitrage. They're borrowing at 3% while their wealth grows at 10%. That's a 7% annual profit just from the mechanics of the loan itself. Now you might be thinking, okay, but eventually they have to pay back these loans, right? And when they do, won't they have to sell stock and pay taxes then? That's where step 3 comes in. Die. Yes, you heard that right. Death is the final piece of the strategy, and it's the most controversial part of all. When a billionaire dies, something magical happens in the U.S. tax code. It's called the stepped-up basis rule. Here's how it works. Let's say Jeff Bezos bought Amazon stock for $1,000 decades ago, and it's now worth $100 billion. If he sold it while alive, he'd owe taxes on $99.9 billion in gains. But if he dies and passes that stock to his children, the tax basis resets. The IRS pretends his kids bought that stock at its current value of $100 billion. All those decades of gains, all that appreciation just vanish from a tax perspective. His heirs can immediately sell that stock and pay zero capital gains tax. So the full strategy becomes crystal clear. Billionaires buy appreciating assets, borrow against them to fund their lifestyle without paying taxes, and when they die, their heirs inherit everything with a clean slate. The taxes that should have been paid over a lifetime simply disappear. It's not tax evasion, it's tax avoidance, and it's the single most powerful wealth preservation tool in existence. ProPublica calculated that between 2006 and 2018, Elon Musk's wealth grew by $14 billion, but he paid just $455 million in taxes. That's a true tax rate of just 3.27%. Jeff Bezos's wealth increased by $99 billion, and he paid less than $2 billion in taxes. A true rate of just 1.1%. Meanwhile, a nurse making $60,000 per year pays 22% federal income tax plus state taxes, Social Security, and Medicare. The system is designed to extract maximum taxes from wage earners while letting billionaires pay almost nothing. But the buy, borrow, die strategy is just the beginning. Let me show you the other tactics billionaires use to pay even less. First up, offshore tax havens. Countries like the Cayman Islands, Bermuda, and Luxembourg have become billionaire playgrounds specifically because they charge little to no taxes. Here's how it works. A billionaire sets up a shell company in the Cayman Islands. That company holds their wealth, investments, or intellectual property. When that company makes money, it's taxed at the Cayman Islands rate, which is 0%. The profits sit offshore, growing tax-free indefinitely. Apple, one of the world's most valuable companies, has held hundreds of billions of dollars in offshore accounts to avoid U.S. taxes. It's estimated that American corporations alone have stashed over $2 trillion in offshore tax havens. Individuals do the same thing. The Panama Papers leak in 2016 exposed how thousands of wealthy individuals were hiding assets in secretive offshore accounts. Then there's the charitable foundation loophole. Billionaires donate to their own private foundations and get a massive tax deduction. But here's the trick. They still control that money. The foundation might invest it, grow it, and eventually use it for charitable purposes. But there's no rush. The Rockefeller Foundation was established in 1913 and is still going strong today. Billionaires effectively get to write off their taxes while maintaining control over their wealth through their foundations. Let's talk about carried interest. This is a special tax loophole for hedge fund managers and private equity billionaires. Normally, income is taxed at your ordinary income tax rate, which can be 37% at the top. But carried interest allows fund managers to classify their earnings as capital gains, which are taxed at just 20%. This loophole alone saves billionaires like Steve Schwarzman, and David Tepper hundreds of millions of dollars per year. And then there's real estate depreciation. Real estate moguls like Donald Trump have used this for decades. The IRS allows property owners to deduct the depreciation of their buildings as a business expense, even if the property is actually increasing in value. So you can own a building worth $100 million that's appreciating every year, but still claim losses on paper due to depreciation. Those paper losses offset your other income, reducing your tax bill to near zero. Now let's talk about the impact. Why should you care if billionaires pay less in taxes? Because someone has to make up the difference, and that someone is you. When billionaires avoid trillions in taxes, governments have to cut services or raise taxes on everyone else. The infrastructure you drive on, the schools your kids attend, the healthcare system, all of it is underfunded because the people with the most money pay the least. A 2021 study found that if billionaires paid the same tax rate as the average worker, the U.S. government would collect an additional $400 billion per year. That's enough to fund universal health care, free college tuition, or modernize every road and bridge in America. Instead, that money sits in billionaire bank accounts, growing tax-free while working families struggle with rising costs. And it's getting worse. Wealth inequality has exploded over the past 40 years. In 1980, the top 1% owned about 7% of all U.S. wealth. Today, they own over 32%. The top 10 richest people have more wealth than the bottom 50% of Americans combined. That's over 160 million people. So what can be done? Some economists propose a wealth tax where billionaires pay a small annual tax on their total net worth, not just their income. Elizabeth Warren proposed a 2% tax on wealth over $50 million. That alone would generate nearly $3 trillion over 10 years. Others suggest eliminating the stepped-up basis rule, closing the carried interest loophole, or creating a minimum tax rate for billionaires. But here's the reality. Changing these laws requires political will, and billionaires have enormous influence over politics. They fund campaigns, lobby Congress, and hire armies of lawyers to protect their interests. The game is rigged, and they wrote the rules. So what can you do? Educate yourself. Understand how the system works. Vote for politicians who support tax reform. Support organizations fighting for economic justice. And most importantly, spread awareness. Share this video. Talk about these issues. The more people understand how billionaires avoid taxes, the harder it becomes for them to defend the indefensible. The buy, borrow, die strategy isn't some conspiracy theory. It's documented, legal, and happening right now. While you're working hard and paying your fair share, the ultra-wealthy are playing by a completely different set of rules. The question is, how long will we let this continue? But the story doesn't end here. The real question is this: what if those unpaid taxes actually went into the public treasury? What kind of world would we be living in today? Let's find out, through a scenario that's not fantasy but entirely realistic. Imagine an extra $400 billion every single year flowing into the system. $400 billion every year. What could that money do? Universal health care. The U.S. health crisis could be solved almost overnight. According to World Bank estimates, providing universal health care would cost less than half that amount annually, which means the taxes billionaires aren't paying could literally save millions of lives through free medicine and treatment. Student debt cancellation. Right now, American student debt totals about $1.7 trillion. With $400 billion per year, that mountain of debt could be wiped out in just 4 years. An entire generation could start adulthood debt-free instead of shackled to decades of repayments. Solving the housing crisis. In cities across the U.S., rent has become unbearable for working families. Yet $400 billion annually could finance millions of affordable homes and social housing units. Shelter could go from a luxury back to a human right. Rebuilding infrastructure. Roads, bridges, energy grids, internet access. America's crumbling infrastructure could be rebuilt from the ground up. And those projects wouldn't just modernize the country, they'd create millions of jobs. Now let's compare this with Europe. In Scandinavia, healthcare, education, and housing are seen as rights, not privileges. Why? Because the wealthy are taxed heavily, and that money funds social services. The results are clear. Longer lifespans, lower crime rates, higher happiness. Meanwhile, the U.S., the richest country in the world, lags behind in all three categories. The reason is simple. The money goes to the wrong pockets. And what about that old line, if you tax the rich, they'll leave and the economy will collapse? The truth? the exact opposite. History shows that higher taxes on the wealthy often coincide with stronger economies. In the 1950s, the U.S. top marginal tax rate was as high as 90%, and those years were some of the most prosperous and fastest growing in American history. Today, European nations with high tax rates on the wealthy consistently rank among the most competitive, innovative, and stable economies in the world. Sweden isn't collapsing. Denmark isn't begging billionaires to stay. Because when the system is fair, prosperity is shared. Now let's zoom in on the social fallout. The middle class is disappearing. A single income once bought a house, supported a family, and paid for college. Today, even two incomes barely cover rent. Why? Because the tax burden has shifted downward, while the wealth stays locked at the top. Generational inequality is exploding. For the first time in modern history, young people are projected to live worse lives than their parents, not because they're lazy or entitled, but because the system has been tilted against them. And then there's the basics: education, housing, healthcare. These are the pillars of a functioning society, but they're collapsing under the weight of billionaire tax avoidance. University means debt. Housing means lifelong rent. Getting sick means financial ruin. This isn't just an economic issue. It's a threat to social stability itself. Here's the truth you need to remember. This money wasn't stolen from us. It was taken from us and handed to them. Legally, systematically, deliberately. So I'll leave you with this. If $400 billion went into public hands every year, what kind of America would you want to see? Free healthcare, free college, affordable homes. Write it down in the comments. I want to hear your vision. And if this breakdown opened your eyes, hit that like button. Subscribe so we can push this truth further, because the only way things change is when enough people finally see the game for what it is. We've seen it now. The question is, what are we going to do about it?